Good afternoon and welcome to Options Tender. It is Monday. Happy Monday, everybody. Hope you had a great weekend. June 10th, 2024. It's about 2 p.m. Eastern Standard Time. I do these videos anywhere from noon to about 2. I'd say this is usually the latest I do it. But if you're a supporter, you get these videos intraday, but they will be released to the public at 4 p.m. each and every day. So thanks for joining us here. We're going to go through SPY on multiple time frames. And then on the lower 65-minute, we'll zoom through, we'll go across the board for IWM, QQQ, and the VIX. And I also want to just, at the end, show you two charts that support my thesis on Tesla in the near term. So stick around, check that out. And if you want to listen to this whole entire video, which they're usually about 30 minutes, I kind of recommend, going through the play at 1.5 speed. It really helps. I started doing that myself, and it helps me get through a lot of videos. I watch a lot of YouTube videos, and I learn a lot off of others, and I recommend you do the same. So, all right, let's jump into it. We have SPY on the weekly time frame. Have a nice push off the 8 EMA, our momentum indicator. Our trend is up here with the 20 simple moving average. We're still inside last week's range, but we're looking to push above. Do I think that this week we go higher? Yes. Can we dip a little bit below? And I'll show you, yes, and I'll show you that with the lower time frames. But so far, just bullish on the weekly time frame. We are making negative divergence on all time frames, so we have to be careful coming up into our resistances and our targets. On the weekly time frame, we'll go to the weekly board. We have some time confluence here, relationships towards the end of July, so we'll keep those in mind as price moves. And our end target, possibly, if we get there, is 560 on the weekly time frame. Now, is it going to be in that straight line? No. It's we'll probably likely have some sort of dip or sideways consolidation before getting to that point. So don't look at that. That's just a reference that the 560 is the next target. Let's move to the daily time frame. Daily trend is our friend. First, we look at the traditional technical analysis, the visual of technical analysis, and we have a rising wedge here that we're filling out. And it looks as if price action wants to get up to our targets here around the 45 area that we continue to talk about over and over in every single video. And we have to keep reiterating this because on the lower time frames, it gets kind of scary when the market reverses and dips, and we kind of want reassurance like, hey, should we still be holding our positions? And I say yes to the long side. All right, until we get into these targets, then I think at that point we'll have a binary situation to where we move down, make a lower high, and continue. Or, since we'll stay bullish with the premise that the Fed isn't really going to do anything yet, and we'll get a nice breakdown from the wedge, find support, and then reach those 560 targets later on. All right, but we will play this downside. I think it'll be a little bit more significant move. But we'll talk about those targets to the downside later on as we get up near our upper targets. So if you're new to the channel, this is kind of our pathway coming up here in the future, and we're looking for an ending diagonal on SPY. Now, QQQ, I just think that is an impulse wave where it's a 1-2-1-2 and so on for a 5-wave move to the upside. But I think SPY is a little bit different, and I think we have an A, B, C for wave 1, wave 2, wave 3, 4, and we're in wave 5 right now. So I'm looking for an ABC in this wave. It is possible that the 5-wave move, let me clear this up for you. It is possible that this 3-wave move for the ABC could be complete at our target here, our second to last target at the 150 extension from 2022 retracement. So that is the 545 area that we're looking for. So this possibly could be an ABC, and that's it. And then then we have our recession after that. Or what I think at this point is more likely is that this is a 5-wave move up. And we're going to go through the count later on in the 65 minute, and we're going to show you exactly what I'm looking for. Okay, so again, not a straight line necessarily, but I think it's more likely that this in A, we get some sort of B correction. And again, we'll talk about where it corrects to later on. And then we'll be looking for the last target somewhere up here at the 560. That's the 162 extension on the weekly time frame. Now, with the time relationships, here's all of these relationships in later July. So we'll keep that in mind as time goes. But right now, we're looking at first FOMC coming up on Wednesday. And then we have a relationship on 617 and 621. Okay, so one of those we're going to look for, where is price at? Is it lower? Is price lower at the time? Then we'll be looking for a long play. Is price higher? Are we getting into the targets in one of these time frames? Then we'll be looking for a short. All right, we'll be looking to put on some puts. Remember, time does not reflect on direction. It's just a relationship of where price is, and then we can say, hey, we can look for reversal at that point. Okay, so let's go ahead and go to the lower time frames. First, the traditional technical analysis. You see the wedge that we're filling out. Here's the bottom of the wedge. The lighter line is the exact from the bottom, but then we have the benefit of the doubt that is geometric with these two lows here, and also coincides with the 200 moving average on the 65. Okay, so that's why I have them both in. This is more of a zone. All right, so we have our liftoff here. This is our wave 5, and we're getting kind of stretched out there. I have a little consolidation. I do think this is possible that we can get a consolidation and test this. It would be a retest of this breakout technically. And you see the triangle that you can draw in here. There's some sort of triangle. But we have the expected move here, the lower expected move down here at the 527. So that's a possible spot that maybe we get more of the reversal on turnaround Tuesday. And all we're doing is making a lower high. And then, which in a few minutes here, I'm going to add on some SPY puts. But I do think that we could get turnaround Tuesday and have a negative day down here, a day or two. Maybe we open up lower down here into the options expected move into the FOMC. If that is the case, then I think that we're looking for a long play, a reversal into the rest of the week and into our targets, which our targets are highlighted up here in the 545 zone. So you see that's the top of our wedge here. We have the confluence of a few trend lines. All right. And if price continues higher, maybe into the options expected move, the targets up here before FOMC, then I think we correct and then we continue higher after that. But if we're into these main targets into FOMC, of course we'll keep protection on. So you always want protection into big catalysts like this. And if we're already up to the targets, then I think we're looking for a reversal to the downside and a possible break of the primary wedge here as well. So keep that in mind. It's about where we are at the time, but I'm bullish above this zone. Bullish no matter what, and unless or until we hit the targets. Okay, so let's look at how we get these targets. And I do have a tutorial on how I look for these targets as well. I'll post that at the end of the video. So on this lower time frame, we had our retracement here in the wave 4. And so that full retracement, we have the extensions from that retracement. We hit the first one at 127. We hit our second one at 138, and now we're correcting into these time references, and you see that this FOMC here, so we have a pocket, we have a time relationship cluster here. So I do think we'll reverse somewhere over whether price is higher or lower. So this is the situation where we continue to make new highs into FOMC. That's what this situation is, and then I think we correct and go higher. Now in the different situation, so it's kind of working out so far with that situation. So if not, if this is just a lower high here and we correct, and I'll show you, this could be the alternate situation. I really don't have a bias on this. I'm not really, I'm long. I don't have any put protection at this point. But I will in a minute, because that would be a great put play. And that would be the other scenario. Maybe into some time relationships here until later this month. Okay, so let's see here. Okay, let's do the wave count. So we're starting to get a structure here. And this is why I'm kind of thinking that we have a deeper correction before going into FOMC. This would be a wave 1. This is the most bullish scenario. Let's put these in yellow, pretty bright, so we can see these. And this would be, let's duplicate. And then we'd be looking for wave 2. And I'm not going to count the lower, the minor waves. I'll just go through it with you. And so this is a 1, 2. And now we have a 1, 2, 3, wave 4, and 5 in yellow. So if this is over, if this wave is done here, or just a little bit higher, either one, then we'll have wave 3 completed. And this will determine which one is here. So if we start to go lower into tomorrow, into FOMC, then wave 3 already completed right here. And we'd be looking for wave 4. Okay, and then we'll get wave 5 in there in just a second. So we'll be looking for wave 4 to complete, and that would go right into, it's very typical for wave 4 to get into the lesser degree wave 4, which you have all this room here. So that's the former all-time highs, so that would act as good support, and we'll have the 200 coming in as well. And then our wave 5, duplicate text, our wave 5 would be into our targets up here. Okay, and the only difference between these scenarios is price continues to go higher into FOMC. This would be wave 3, and I'm not putting a target on this one. This could come all the way back down here. It doesn't really matter. We'll see where support is as price tells us. So this might not be deep enough. Just know that this is just a pathway that we'll get. So wave 4 would then be for wherever the blue comes in, and then we get 5. Okay, so tomorrow would say a lot. Do we get turnaround Tuesday, a little bit more negative, and then go higher, or do we go higher into FOMC before getting our reversal? And I think that reversal could be much deeper because of the catalyst. So we just have to keep that in mind, that maybe we could just come back all the way back down to the previous wave 4 before going higher. So I'll leave them like this, just so we don't get it confused that it's just going to be a little consolidation then higher. I think it could be a pretty big move, being volatile with FOMC, and then a higher move above. Okay, so and that would mean wave 4 would be over here. So that's your two scenarios that we're looking at. I am going to put on just a couple options to protect my positions going into FOMC for tomorrow, turnaround Tuesday, assuming that this is a lower high setting up right now. And then we'll clean up these boards as we go. And we're getting into a time relationship right now, today into turnaround Tuesday. And that's why I think this could be a little bit of a top here. So we'll leave these on for tomorrow's video. And let's go around the board. Triple Qs. We have the expected move up above. And we have some confluence above here. So price can hold on to here. Looks like, you know, this looks like it's setting up to want, it's really just making a triangle and an equilibrium as a consolidation. So this could break down from here. And again, this would be the previous wave 4. And maybe we close these gaps and then head higher. And then you have the trend line below there. So that would be a good play for the targets up above. If we get up into FOMC first, then we'd be looking for some puts into there, into lower prices, breaking down from this wedge. IWM, so this is a confusing one, and this is why I don't trade IWM very often. You have your trend line here, and we gapped underneath that trend line for one more move, and nothing's changed. Now we're positive for the day. We have our left shoulder, head, right shoulder, and so we're looking for a nice move higher, and we're playing those individual names, those small caps, to represent this breaking out to the upside. And you know, we're in this equilibrium right now, and I do think we'll get up to this 208 and plus further. And we just went over with the members the largest position in IWM, the largest holding, SMCI superconductors, on our long play with that. And so I think that will mimic exactly what, and actually take charge, which it's up 3% plus today. And I think that will take charge in moving the small caps higher. It has to do with AI and things like that. So NVIDIA and SMCI and a bunch of names. But yeah, so I think that's where we go. Let's go over to, we're not looking at too many. Boeing already made its move. We're not looking at too many names here in the Dow, just because I do think this looks like it broke down from the trend. We're back testing. So I do think this will represent, I think the Dow might drag the market down going to turnaround Tuesday. And this would probably lead it to the downside, get a higher low, and then retrace just a little bit higher into our higher retracements. And this might be the top here. So I do think the Dow may have topped, and we're just looking for some just slightly higher highs in QQQ and SPY. And I think this is kind of telling us, hey, this is going to move down first, drag the market with it going into FOMC, and then we get a push up after FOMC. So the VIX gapped up today, and with that gap up, it went right into resistance. So you had that former megaphone, and then you have the 13. So it could be trying to make a higher low, but you know, if we get a higher low tomorrow and start to lift off and get above 13, then I think we look for a little bit higher prices and we start getting rejected off of here going into FOMC. So that would just it would kind of solidify that we're getting turnaround Tuesday and the market's going down while VIX goes to test these higher levels. And then I do think going to FOMC we reject and make a new low possibly in the VIX. I think that's a more likely situation. And so we just, monitoring the VIX is more of a real-time situation rather than me projecting. So if the VIX does this, then I think the market will decline. And it looks like it wants to. It's getting the lower time frame higher low, and it's just going to be a corrective move. And if the VIX starts rejecting, and then I think we're likely that the market's going to go for those new highs and get into this complacency area in the VIX. And then we'll be looking for our not put protection, but actual put plays to the downside in the market after we hit those targets. All right, let's look at XLY to finish this off. Let's go to XLY. That's a consumer discretion ETF. And on this, let's go to lower time frame board. We're looking for a setup here. We're not playing directly the XLY. I do think this is a sideways move, consolidation, and price has this left shoulder head, right shoulder, and is starting to break out from there and pushing off of the 8 EMA, and it should start moving to the upside. Tesla, Amazon, those are the biggest holdings in there. We do have bullish momentum on the monthly time frame, weekly, daily. So we're pushing up on the daily right now. So I do think I think XLY is kind of representing the fact that like Tesla is going to have just this massive move towards the end of this move, and a lot of other small cap names as well towards the end of this move. And then this is kind of supporting that scenario. And then the other one we just want to look at, very simple. These are just simply, I'm not mapping these out. This has been consolidating or bottoming, in my opinion, for quite some time. And if you map this out here, we have great support and resistance, and we're coming back into that support, held it, and now getting some sort of positive market structure in this falling, this is a bullish falling wedge. And so if this starts to break out, get back above, it looks like it has this posture. And if it gets above this wedge, starts breaking out, that's going to be a tailwind for Tesla as well as the XLY. So that's what I want to show you. Tesla so far is just in this chop zone. It's been in there for over 5 weeks now, and there's not much to do with it. It's going down to test, it looks like the 50 at this point. So 50's got a hold. We're looking this to go sideways a little bit, but on the lower time frame, it's a little bit more clear that it's kind of holding up in a certain direction here. It looks like we're getting our left shoulder head, and we're mapping out some sort of right shoulder. Do we get a new low here? Possibly. And then I just move this over to this point. But if this starts breaking this low, then I still think the scenario is going to work out, where this would be an A. We had this B with triangles inside and all sorts of complexity, and then we're getting the wave C. If this is an impulse down, we'll probably see price go to the 161 level, test there, and then below that, if it wants to go even lower, the 155. So this could be a drag onto the market into tomorrow and into FOMC. But I think ultimately we'll have another trade set up. If price breaks below here, doesn't hold, then I think it goes lower, and we'll have another trade up set up to the long side. And this will end up being some sort of, you'll see divergence, and this will end up playing out as some sort of flag, or even a channel as well. So we'll just kind of keep this here, see what we'll be looking at. As of right now, it's just some sort of triangle. All right, that's what we got. Thanks for joining us here at Options Center. Have a wonderful day. We'll talk to you in the next video.